Bitcoin and, more broadly speaking, cryptocurrencies are back in favor. Certainly Bitcoin is, and we've seen levels not seen since November 2021 with recent gains in the market. A number of factors driving this. But let's get some more detail now with Nick Cawley, who's a senior strategist at DailyFX, joining us now on the line with some more detail. Nick, you've been following this with interest. We'll talk a little bit more about where it is at the moment in the context of where it's come from. But what have been the drivers behind this move that we've seen?
Yeah, hi, Jeremy. Yeah, it's very much a demand-driven move at the moment. And what you've had is you had these 11 spot ETFs, Bitcoin ETFs, approved by the SEC on January the 12th. And ever since then, these companies, the ETF providers, have been buying Bitcoin and in substantial size. I mean, some days, you know, they're buying multi-billion dollar amounts of Bitcoin. And so when you get this driver coming through, when you get this new driver, this new demand coming into the market, it's obviously starting to force the price higher. And then what you're actually finding is that supply from the supply side, the supply is not meeting the demand. And so what you're going to have is sellers are in control and they're demanding higher prices for their Bitcoin.
Yeah, before we went to air, you and I were discussing this, and the other factor we were going to talk about was what's going on with this Bitcoin halving. Now, we've heard about this before, and my understanding is it's coming up again. To what degree is this a driver as well to what's happening?
Oh, very much. It's, you know, the Bitcoin halving, it happens every 4 years, and basically mining rewards, you reward for mining a block on the blockchain, they're halved. And this is anticipated to come in mid-April, so in about sort of 50 days' time. And so what's going to happen is that the supply of new Bitcoin is going to be reduced in half. Mining, as I said, the miners will only get half of what they're getting now as a reward for mining a block. And so what you're going to have is you're going to have this increased demand, and then you're going to come into a situation where you have reduced new supply anyhow. And I think a lot of this drive is people anticipating that if the ETF demand continues at the rate it is, it may drop, but then it's going to run into a lot less supply. And again, then sellers will demand more for their Bitcoin.
Yeah, let's take a look at the price chart for Bitcoin. As I said, other cryptos have been taking part in this move. This is a long-term chart, Nick, and you'll see it goes down back to the beginning of 2018 when we were traded just something like 50 or so. Then came this massive rise up in the middle of the chart here, 15th of November, 68,971. Of course, we're talking dollars here, so there's a currency risk as well, isn't it, for us, Brits at least, and others buying from other currencies. But here we are now trading at, as I said, highs not seen since November 2021, just after that record high, 61,890. From the people you're talking to, does the price have the impetus to go to a new record high and possibly past?
A lot of people were looking at a potential new all-time high, which is 69,000, we'll say, after the halving event, which is going to be, as I said, sort of hardwired into mid-April this year. But if you look at the price action at the moment, you know, every time a seller appears, you know, they get scooped up, their Bitcoin gets scooped up, and the prices move higher. It very much is. Always difficult to say with cryptocurrencies because they do have this inherent volatility, but it looks very much like a one-way market at the moment. Potential to have a 5 or 10% turn lower, but at the moment it does seem to be very much that people are pushing for a new all-time high, and perhaps before the halving.
And of course, when you see an accelerated upside, or indeed any downside, I guess there's always a risk to following the trade in that direction. Talk to us a bit about risk management, and also, of course, the idea about playing proxies in this field as well, because I mean, it's restricted to Bitcoin. Bitcoin, of course, is a bit like gold, isn't it? It doesn't actually have any sort of material returns like dividends or income and so forth. So I know that at DailyFX you sort of follow proxies. Just explain first of all about the risks in doing this.
Yeah, I think when you look at Bitcoin, and actually a lot of other asset classes as well, for example, if you hold spot Bitcoin, if you just physically hold, Bitcoin on either on your computer or on your ledger, the price movements aren't going to affect you as much as if you're leveraged. Now, if you have leverage on cryptocurrencies and on Bitcoin or Ethereum, then you're in a slightly different ball game because the price movements, even if they're 2 or 3% price movements of the cash Bitcoin price, can be magnified to either be very beneficial for you or not, or you could lose a lot of money. So I think you have to sort of take the distinction between holding sort of cash or spot Bitcoin and leverage positions in cryptocurrencies. But yeah, as you were saying about proxies, I mean, you can look at it in different ways. I mean, there's two proxies that we look at, and one is Coinbase, which is one of the largest exchanges where you can trade Bitcoin. And so obviously with increased activity in Bitcoin and all the other cryptocurrencies, that's beneficial for Coinbase. And the other one is, I think one of the more very pure play is MicroStrategy. And this is a company run by Michael Saylor, and they have approximately 193,000 Bitcoin on their books. And so their share price is very, very much related to swings in the Bitcoin cash price.
Yeah. Okay, Nick, thanks very much indeed. Look, we'll leave it there, but thanks for joining us with your thoughts on Bitcoin, recent highs and where it's likely to go. Also, some of those proxy plays, which are really important because at IG here, there are restrictions for trading Bitcoin, but you will know all about those. But it's interesting following some of those proxies that Nick was talking about. That's Nick Cawley from Daily FX.